The following is a conversation with Oliver Mavher and Michael Deichsel, both tax experts at KPMG Austria. In this conversation, we will talk about everything around the topics digital assets, cryptocurrencies, and taxation. Enjoy the show. Welcome to a new episode of the Life Science Get Together Beginner's Mind podcast. Today with one of the most popular topics these days. I'm not talking about SARS-CoV-2. Today I'm talking about cryptocurrencies and falling down the digital asset rabbit hole. And I'm very happy to have today on the show with me, Oliver Mavher and Michael Deichsel from KPMG Austria. Welcome to the show.
Hello.
Thank you very
Thanks
much.
for having me. Yeah?
Welcome.
Good to see you. Good to see you both. Cryptocurrencies are all over the internet currently. And whenever I open up YouTube or Google something, immediately I get very smart and very nice messages, very well explained. And they all revolve around price predictions. What will Bitcoin be worth next year and in 10 years? And the most interesting price predictions I got was from Raoul Paul, for example. He predicts that next year in spring, Bitcoin most likely is to reach $400,000 in price. And in 10 years, Michael Saylor, for example, estimates that Bitcoin might have a price of up to $15 million per Bitcoin. And the effect that I see when I go through social media channels, like, for example, Reddit, is that basically everybody and their grandmother start trading. And they also today got this first indication that a friend of mine said that his grandmother started buying Bitcoin. So it looks to me very in bubble territory.
Also my wife. So yeah, that's also proof of that. Yeah.
Well, and we have this topic on a Life Science podcast, so this is another proof for that thesis. Definitely, I think cryptocurrencies are going mainstream, and everybody is looking at this and starting trading in that. And there is one open question that I ask myself: what are the consequences in the real world? Is it just something that is like baseball cards, for example, or like in Europe, it's more the soccer cards? For global world championships, for example, when people buy these sticker albums, or does it have more serious consequences, like, for example, buying and selling equity or speculating with currencies? And Oliver and Michael, you are the experts from KPMG on that topic. Can you give us a little bit background where you are coming from in terms of taxes and cryptocurrencies?
Yeah, thank you very much. Yeah. As I said, my name is Oliver Mavher. I'm a tax consultant, senior manager, and certified officer at KPMG in Vienna. And I have more than 10 years now of experience in the field of tax and managerial advisory, with especially a focus on international and national tax, SMEs. Also, they're highly focused on entrepreneurs, startups, but at KPMG more on scale-ups and restructuring as well, and digitalization and automatization. All these are factors why I'm also into cryptocurrencies. Yeah. Before I rejoined KPMG, I was involved in a conceptualization of a startup accelerator program at one of the leading tax advisory firms here in Austria. It is called Startup Lightning Accelerator, SLAX. I will talk about one of these participants of the first batch, which was also connected with the crypto ecosystem. And I assisted throughout this program as a tax advisor for startups. Yeah. And now I'm excited to be part of KPMG's startup initiative, Smart Start, which supports young entrepreneurs on their way. We know best what it means to have an own business or to found a own business, because several partners of KPMG also are invested in startups, or maybe they also founded some startups. Yeah. And also my time at Startup Light and Accelerator was like to found a startup as well. Yeah. And yeah, we are glad to assist scale-ups, individuals, also in the crypto sector, with our reduced fees, yeah, and also to help them to establish their business beyond Austrian borders, because we are part of the global KPMG network. Yeah, so that sums it up. More information also on the website of KPMG, and you could also add me on LinkedIn, because there I also give updates regularly in the sectors of cryptos or funding, because I've also an expert, unfortunately, the last year in the Corona aids and measures and fundings, also with the startup fund. The startup venture capital fund, I think it will never be born. I think, yeah, that's the problem.
This would make up a nice story for a next episode, I think.
Yeah, yeah. I think they said it for, 1 year ago. They will have certain investment fund, and yeah, that's not the case up to date. Yeah, in the crypto sector, I advised, I think, since 2013 or 2014, entrepreneurs in this kind of ecosystem. For instance, we had, as I already mentioned, Herosphere, or Hero, formerly known as the Social Bet, in our first batch in the Slacks program. And they made the first initial coin offering in Austria in 2017. And the token holders participated in the revenues of Hero, or the Social Bet, as well as now I think the cryptocurrency, yeah, is listed at certain exchanges, and yeah, it is operated on the Ethereum platform. So that was a very new thing, and I was very glad that I assisted throughout the Slacks program in this kind of matter, yeah, in the first ICO. And they recently made an exit to I think uh, yeah, they made an exit. Maybe I remember it then correctly, and they are now working on the NFT business line in their company. Yeah, and I think we will also talk about what is an NFT, and is it like you call it the new soccer cards, or because NFT, for instance, is also very popular in the basketball card sector, because I'm a huge basketball fan, actively in the past, and now more passive. Yeah, and I watch many games, and also the NBA. And yeah, there is like this new kind of basketball card in a NFT form. We will talk about that later. Yeah. Yeah. And furthermore, I advised plenty of entrepreneurs which were engaged in the mining sector a long time ago. I think we will also talk about the current situation in that sector. But for taxes, it was very straightforward for the income taxes, but often there was a problem with VAT. I will also talk about that later. Yeah, and furthermore, I advised together with Michael on the first STO security token offering in Austria.
What is
by Blockbit.
STO? What is STO?
Security token offering.
Okay.
You can get a token, yeah, and a token is like you get a share of the company's profit in a specific form. We will talk about that later, because it depends how this token and the smart contract is set up. Yeah, but you get a share of the profit of the company. Yeah.
Yeah, let's dive into that later. I think it's the ICO 2.0, so it sounds much better.
Yeah, that's correct. Yeah, because ICO, yeah, that was I think in 2017, 18. Yeah, there was this huge crypto winter and also these very big frauds in that kind of sector, because it was not regulated by the authorities in Austria, for instance, the FMR. And so after that, the security token offering, which are regulated by the FMR, getting more popular. And I think I think we talk about that later. Tokenization of assets. I think that's the future. And it could also, or is now disrupting the finance sector. I would also recommend Blockbit. This web app helps with the calculation of taxes with regard to cryptos. And it also helps us to advise individuals which are regularly come to us and would like to have assistance or services with kind of with regard to the taxation of crypto trading.
So you have a profound background in the crypto space, and basically I think you are the most accomplished tax advisor in the startup ecosystem. Michael, where are you coming from?
Thank you very much. Thank you very much, Christian, for hosting us today. My background, of course, is a little bit shorter. I think all of my involvement in crypto and also with KPMG started in, I think it was January, February last year when I did my master thesis at the Vienna University of Economics and Business in cooperation with the Austrian Federal Ministry of Finance on other income. So other income basically is the seventh income type of the Austrian Income Tax Act, and the Federal Ministry of Finance explicitly wanted to have the tax treatment of crypto assets, the current tax treatment of crypto assets assessed as a part of this master thesis. And of course, I knew before that there were such things like Bitcoin, Ethereum, etc. But I didn't get involved in this kind. And when I started to assess the tax treatment, I also started investing in crypto assets. And I was at those days I was working for another tax advisory firm, and due to the master thesis, I really got interested in the field of crypto assets, and I saw a job description of a KPMG in cooperation with Vienna University of Economics and Business, where they explicitly looked for an employee who is interested in that kind of area, also for research aspects. And now since June last year, I'm part of Oliver's team at KPMG, but I'm doing the part-time, and the other part of the week I'm a teaching and research assistant at the Vienna University of Economics and Business, where I focus on the tax treatment and the accounting treatment of cryptocurrencies, where I'm also doing a PhD thesis on the topic. So in addition to the practical point of view, try to see these things from a scientific point of view, which is really thrilling. On the one hand, because we will get to that later, there's only very little information available how the tax treatment works, and on the other hand, as Oliver already mentioned, it's a rather dynamic and a rather fast-moving environment. So that's really kind of thing, yes.
That's true. It's very fast moving. When I think back, when I got this topic the first time on my table, it was back in 2011. I completely ignored it. It sounded to me a little bit funny when people asked me whether I would like to buy a token. It was back in 2011, and I knew token from computer games. So what I thought it would be is something that I can use in game. So my first question was, what is the game that I can use that in? And the answer was, no, it's not. It's not for a game. So I asked, what can I do with that? And it said, nothing. You can buy it and you can hold it. And that's it. Sounded very funny to me. And when I heard the first time of the Bitcoin bull run, I think it was 2014-15, I did a little bit of research and quickly came to Warren Buffett's opinion and Charlie Munger's opinion, where they very nicely said Bitcoin is rat poison. And the only thing I did, I copied and pasted it and thought, okay, I mean, it's code on the internet. It can be easily copied. Everybody who wants can set up such a blockchain technology ecosystem. And when there are thousands of tokens, I could not imagine that the price of one single token goes up. And I was right, because in 2015, if I remember it right, or 14, we had a huge crash, and former Bitcoin millionaires became poor again. And so I thought, that's it. The next wave was in 2017. And it was also very interesting, because usually when there is a bull run, it's led by institutions. And 2017, it was the opposite. It was led by retail investors, and very often investors who were not very familiar with investing anything in securities. And now in 2021, we have the next bull run, and Bitcoin and other cryptocurrencies saw a high in February. And the price predictions are very interesting. And Oliver, you mentioned already in your opening that there is something behind that ecosystem. You mentioned tokenization. Can you explain a little bit what that is and why cryptocurrencies are here to stay?
Yeah, because now you can also tokenization of an asset means that you can issue on a blockchain, for instance, on the Ethereum blockchain, a token. Specifically, I talked about a security token that digitally represents a real tradable asset. That could be, for instance, security, or for instance, also a piece of art, or for instance, like real estate and so on, and in many ways similar to the traditional process of the securitization, is that more with a modern twist, also linked to a smart contract. I think maybe Michael will also give us a definition of a smart contract or how to use it. And these security tokens are created through a type of initial coin offering or security token offering. And you get like a token on the blockchain, and you get maybe a right of this kind of asset, or maybe a right to get future profits or a share of the turnovers of the company, for instance, etc., etc. It depends on the smart contract, which is defined by the investor and by the company which issues the asset, which is registered, for instance, on the blockchain. Maybe Michael, could you also define what's a smart contract?
That's a very interesting point. What is the advantage of having smart contracts? I mean, we can put everything in paper. We have contracts already. Why does it make a difference?
The advantage of a smart contract, we have to start with the definition. What is a smart contract? A smart contract is a computer programmed code on a blockchain that encompasses values, that encompasses rights. And these values and rights are connected to an if-when function. So if this and that situation occurs, then those rights or those values can be executed by the owner of the smart contract. And one of the major advantages is that since it is a computer code, the administration and the execution of these rights can be done automatically. I think this is one of the major advantages, and also given the blockchain technology, which can be seen as a distributed ledger of all transactions. So these are in principle the most two important transactions: the automatic execution and administration of the rights and the transparency the blockchain technology provides.
And it also provides, I think, greater liquidity, because you can also offer certain assets which are very hard to sell on the financial market. And they get more accessible. There's a better transparency because of the blockchain, and it also often leads to faster and cheaper transactions. Yeah,
I think it's a pretty amazing step into the future. When I try to make up a real life example, it's something that I saw on Bitpanda, where they basically take normal equity or shares, for example, from Amazon, and how did you say tokenize that? Create tokens around it, and what it makes is basically that people who cannot afford to buy one share of Amazon, currently I think Amazon is around $3,000 or something. It's one of the more expensive shares. They can buy a piece of Amazon via Bitpanda and invest also, I think, €1 or €10 or $10 and own basically a part of Amazon. And this is pretty amazing because it makes all securities accessible for people with a low net worth, which helps them to get into this creating wealth game that only works with, to be honest, with assets like equity or real estate. Did I get that right?
Yeah, exactly. So what we are witnessing now, that's one of the market trends actually, is that there are many startups emerging that go into that tokenization of shares or tokenization of real estate sector, because with real estate, it's basically the same. If you want to buy real estate in the 7th district of Vienna, for example, you need a really huge investment, which many people actually cannot afford. And tokenization makes it possible in a rather simplified way to put it to divide this real estate into 100, 1,000, 10,000 pieces and sell them separately to
crowd investing, crowdfunding 2.0. And we also see that these companies, for instance, Blockbit, they were the technical enabler for this kind of security token offering. And we see now that more and more established companies, as well as investment funds, also are beginning to tokenize their shares and increase liquidity for their investors as well. Yeah,
and I think this is a huge difference to the past. When I think back to 2013-15, I think mostly technicians were in the ecosystem. 2017 it was speculation, in my opinion. So it was pure speculation of retail investors, the get rich quick scheme. And now I see, as you explain, many use cases, real life use cases appearing, and these tokens seem to play a crucial role in how we define the financial system in future. In the United States, there seems to be a huge debate ongoing.
And also in China.
Also in China, I think banned. Didn't China ban everything?
Yes.
They banned it a few weeks ago. They banned everything. Yeah. However, China bans them, then allows them, then bans them again. So it's...
Yeah, because it's out of political system. But we could also talk about hours and hours because of this kind of topic. Yeah, but
we should create more podcast episodes around cryptocurrencies. In the future. In the United States, when we go back to the tax implications of tokens, there seems to be a huge debate ongoing. As far as I perceive it, it's not clear whether it's an asset, so whether tokens are assets. The first term that was introduced that came to my mind was currencies, cryptocurrencies. And sometimes you also hear that it could be a commodity. Can you give a little bit of explanation? Does it make any difference when it comes to taxation, or is this just an academic discussion?
So, let me begin with that. It depends how these products are, or these tokens are structured. Yeah, they are neither only an asset, a commodity, or currency. It's a hybrid phenomenon of all these three types often. Yeah, and it always depends on the characteristics stated in the especially smart contracts or the contracts. Yeah, so at first we have usually distinguished between the crypto asset and assets and cryptocurrencies. Yeah, that are the main types, which also will be reflected in our definitions or like explanation how to tax this kind of assets or currencies. So maybe Michael, could you please make the definitions for cryptocurrencies and crypto assets?
Of course. So basically, we have to say that a cryptocurrency is a type or a certain type of a crypto asset. So crypto assets basically are assets that are distributed on a distributed ledger technology and with cryptographic technology. And they can be basically divided into coins and into tokens. And coins would be what we call a cryptocurrency. So a cryptocurrency is a means of payment, a means of exchange for goods, for services that can be used by legal or natural persons, but that is not implemented as a means of legal tender. It is not a currency like a euro or a US dollar. For two major reasons. There is no central bank, for example, the European Central Bank or other institutions that back up the value. And the second reason is that you, as a business person, or for example, as a shop, for example, you are not obliged to accept cryptocurrency as a means of payment.
In Austria, for instance, because in other countries now they established it as a currency. Because
there was El Salvador was very interesting to see that. Well, what is the reason, in your opinion, that El Salvador went down the legal tender route?
I think they to get more independent by other currencies, especially the US dollar, for instance. But maybe Michael, do you have another opinion?
I think the problem is that they have a very high inflation on their own currency, and they have, as far as I recall, they have a rather young leader in the country who wants to be a part of this digitalization and wanted to be a first mover, because as you already mentioned, the so-called Bitcoin law, which was implemented in June, I think it was, when they said they would do it, it is a first mover. It is nothing we have seen before. We see that some other jurisdictions in this area think about introducing Bitcoin as a means of legal currency as well. We will see where that goes.
I think I also in the sector of developing countries, I think.
Yeah.
I heard an interesting theory today in a podcast by a US senator. She made a very interesting point. I will post it. Will post the episode later in the description of the podcast. She said when someone from El Salvador lives abroad, today sometimes it's very difficult for them to get a bank account. So they live somewhere, they are no citizens, they have a work permit, but usually are not accepted by the general bank system. So when they want to send money back to El Salvador, to their relatives, to help them make a living, they have to go to Western Union and pay very high banking fees. So her point was that Bitcoin and the move from El Salvador basically drives down the fees for the poorest of the poor, and also gives them access to a global banking system, which they didn't have before. In my opinion, that sounded quite solid, this theory. What do you think about that?
I think it sounds solid. It sounds solid, yes. This is, I think, one side, but the other side is that we still have to keep in mind that it is hardly regulated. We have some steps of regulation in the European Union. I think the US also has done some regulation on this topic. However, in jurisdictions where there is no regulation at all, we can see that it is used for tax evasion, that cryptocurrency transactions are used for money laundering. So this is also the reason why there is a huge skepticism about introducing Bitcoin or any other cryptocurrency as a means of legal payment, because at this time it's hardly regulated. Yeah, and I think legal currency needs regulation.
And I think what's also a pitfall is that cryptocurrency also have a very high environmental impact. So because I think we also talk about mining, how intensive it is for the resources, and how how the reward is there now, very unlikely, But I think that is maybe also a pitfall of cryptocurrencies, which maybe is a problem to introduce them on a higher scale,
Well, this is debate about the environmental reasons. Can you give a little bit more details on that?
Yeah, maybe we could also give you some examples with relation to or with regard to mining. There is also a debate there. So, Michael, could you please also give us the information on that?
Well, basically, the problem with mining is that it consumes huge amounts of energy, and you also need special hardware to do it. And the more people participate in the Bitcoin network, the larger it grows, the more difficult it gets to be a successful miner, to get the block rewards. And so the probability of be a successful miner is shrinking, while the amount of energy which is usually not green energy. For example, 70% of all Bitcoins mined emerge from China, and China uses a huge amount of coal energy plants. Yes, so this is one of the major aspects why the environmental and the ecological aspect of Bitcoins is really something we have to think about.
Yeah, because I think Bitcoin and other proof of work cryptocurrencies, I think they need as much energy as Argentina in a year. I think a few years ago it was only Sweden or so, and now it's, I think, or Denmark, and now it's Argentina for instance. So we have to keep that in mind as well. Maybe it's getting more better with green energy, and it's getting more regulated, or better equipped with the hardware, so that it's has not that impact on environment as now.
Yeah, my personal opinion on that, when we look at China, is that probably energy was one of the main reasons why they drove mining out of the country. They have energy, also they have energy shortage anyway, with or without crypto mining. And Kathy Wood from ARK Funds and Square made an interesting argument. They said they don't believe that Bitcoin, for example, especially Bitcoin, is bad for the environment. Their point was that green energies, mostly solar or wind, have a problem that when they produce energy, very often the energy is not used, and this can become a problem for the power grid. And they said what miners can do is they can basically buy the excess energy and use it in those times.
So, I think that were the advantages and disadvantages of the cryptocurrencies. And now I think there is second kind of crypto asset would be the crypto asset. Yeah. So maybe, for instance, also NFTs. We could also talk about that in a nutshell. But Michael, could you please also give an explanation of what is a crypto asset?
So basically, crypto assets besides in coins, we still have the second category, the category of tokens. Which we already explained. The main advantage of tokens is a token is some kind of also electronically or digitally stored data that again encompasses rights and values. And the major advantage of the token, besides the ability to divide the assets into nearly as many parts as you want, is that you can design them in your very unique way. They can, they're determined by the usage. So what use you can make of it. For example, you have these utility tokens that are, like a digital voucher, an electronic voucher. You have these security tokens, which you would use, for example, to divide shares, to divide real estate, which, can be seen as some kind of financial instrument, some kind of participation right, also for tax reasons. And you also have these payment tokens, for example, which are similar to coins. You also, what we're seeing now with, for example, with the Cardano is so-called governance token, where you, as investor, as a user, have the ability to actively participate in the design of the crypto network. So we see huge amounts of different tokens of different crypto assets, and Oliver also as the NFTs, which are emerging right now in the cultural sector, is a really interesting phenomenon.
Yeah. So maybe a definition of the NFT would like to give you on that is it's a unique and non-interchangeable unit of data stored in a digital ledger. For instance, in the art sector, you can now make sure that your kind of asset or photograph, for instance, cannot be copied or shared without your consent. So it also clearly represents rights, and for taxes, as we will talk about that, it is considered as an intangible asset, as a crypto asset. Yeah, and I think, as many experts said in the past, is that around 40% of the new crypto users now will use these NFTs. For instance, as I already mentioned, this, for instance, basketball cards, yeah, as an NFT, yeah, as their entry point, yeah, and as a result of that, it will grow more in popularity. Also, with other crypto assets, they are the enablers to invest more in crypto assets, and it will also shape the digital economy in the future. I think they will stay, yeah. These kind of assets, these NFTs, yeah. It's not a hype. I think it will stay here in the digital economy.
No, I absolutely believe that. I mean, when I look on especially trading card games, for example, I mean, they are digital already, and they had one specific problem that the cards were not unique. So it's basically just code, and it can be copied or it can be counterfeited pretty easy. And in the real world, when you look at basketball cards or baseball cards, for example, I mean, they are pretty unique. So it's one print, and they can go up in value. I think NFT can fix that. So it's basically they create a unique copy that cannot be counterfeited. Did I understand it right?
Yeah, correct. Yeah. So
exactly, it cannot be multiplied. Yeah.
But the thing is that comes with that then is, well, what does it mean in terms of taxation? I mean, when I look at the price, you can buy tokens basically for low or for high prices, and they can, what I didn't expect, they can create really extremely high gains. So I think, if I remember it right, there was one picture that sold for hundreds of millions. So a Bitcoin billionaire bought an NFT. What does that mean for the seller? Is this a taxable event, or is this just fun?
Yeah. So, crypto assets are treated like other tangible or intangible assets. We'll focus on the income tax treatment of crypto assets as part of a private asset. I also could recommend, I think, the Crypto Guide by KPMG also, and Blockbit. Yeah, I think Michael is an co-author of that. Yeah. In your example, it's not interest bearing investment. So the selling or the exchange of the crypto asset would be a speculative transaction in accordance with the Austrian Income Tax Act. And if the period between the acquisition and disposal of this asset doesn't exceed 1 year, then it's taxable. It's a taxable event, yeah. And the tax rate up to 50 or 55% would be applicable, yeah. Also, the trading between crypto assets and the exchange of virtual currencies, or when you buy with your cryptocurrencies services or assets, then it would also be a taxable event. And it could be a problem that you have gained profits and in the next year losses, but you cannot offset them, yeah. And you can also at the moment, you are not allowed to bring the losses forward to the next year. And it could be that you have to pay taxes, but you're not know that exactly because you thought you only traded and you didn't get any cash, or you don't exchanged it in fiat, for instance, in euro and so. That could be a problem, especially because now the EU plans to regulate kind of sector, the crypto sectors, especially in order that the information have to be, or the know your customer processes have to be implemented strictly in the crypto ecosystem. So I think, Michael, could you please give us an explanation of that? What could be the problem for the crypto trader in the future?
Of course, and I think Oliver, you put it. It's a really good point, because this is why the taxation, the correct taxation of crypto assets, is so relevant. Because if we look in terms of the European Union, we have seen 2 major steps towards regulation. The first has already been implemented. This was the 5th Anti-Money Laundering Directive by the EU Commission, which had to be implemented into national law by January last year. So, which basically mandates the owners of a crypto exchange service to really do these KYC, these know your customer procedures, to collect data about their customers, to look where does the money come from, and they do not have to do it once, so they have to repeat it every year. So the anonymity, the pseudonymity, which is a major part of crypto assets, which is basically one thing why I think you would invest in cryptocurrency, is slowly diminishing, because what we see now is from December last year. This is a proposal to amend the directive on the automatic exchange of information by the EU. For example, as you might know it from your bank account, if you are an Austrian resident and are also resident in Germany, then there's an automatic exchange of information between the tax authorities at the beginning and the end of the year. This encompasses financial instruments. This encompasses real estate. However, it does not encompass crypto assets. And there is a proposal by the EU to also to expand this automatic exchange of information to crypto assets, which I think is likely to be implemented, because as we pointed out at the beginning of the session, we have an increasing relevance and an increasing popularity of this topic.
No, so, it's very. It's an interesting point that you make when I go back to what you said, Oliver, with the NFT. So it means someone who buys an NFT for, let's say, for €1 and finds 2 years later a crypto billionaire who wants to purchase it for 100 million, it basically is tax-free as long as it's a transaction after 12 months. But what is with the artist? I mean, the artist never acquired this NFT. What does that mean in the world of the artist? Is it the same thing that you say after 1 year after you create your NFT and you sell it, it's tax-free, and below 1 year it's taxable? But how to prove that?
So yeah, I think that's a very interesting question, because it's he would the artist, he or she would create this kind of asset. So I think it's very hard to say. Yeah, but then it's created. When it's created, I think you can also prove. Yeah, and if you sell it after 1 year, yeah, you could offset it with the cost to create it. Yeah, and the difference would be the profit or loss. So is that correct, Michael? Or
yeah, that's correct.
So, but that's only the regulation now, because as now in place, and also for the, I think for the next year maybe, yeah. But there are plans to maybe amend the regulations with regard to the crypto assets. Maybe Michael, could you give us a glimpse what to expect in that regard? I think we had these examples in the past with the amendments with regard to the capital income in 2011, 2012.
Exactly, because I think this is right. What we talked about the past 15 minutes. Because if we go back to when Bitcoin started, because it was invented at the beginning of 2009 in Japan, it was created as a means of payment, as an alternative, anonymous means of payment. And if we go back to 2021 to now, we see that is. Of course, it can be used as a means of payment. It can be used as a means of exchange, which we already explained. But by most of the people, it is used as an alternative investment, the same as you would do with financial instruments. And in Austria, more and more details about the eco-social tax reform, which is to take place very shortly. Has also seen these developments, and from what we know, it's very little what we know by now, but from what we know is that it is planned to harmonize the taxation of crypto assets and the taxation of financial instruments. So as far as we know, and how the information is read by experts in Austria, by tax scientists in Austria, is that we can expect in the near future, we can expect the taxation similar to capital income, which means that there's no holding period, no matter if the time between the purchase and the sale is 1 day or 500 days. There will always be a taxable event. A taxable event will be the difference between the acquisition cost and the selling price, which is basically the market price you gain for the asset. And it might be possible that the special tax rate of 27.5% will apply. However, we have to see how that will be in detail. Yeah.
There's one point that I find very confusing. So when I think about tokens, we say it as a means of exchange.
Yeah.
There might very well be that people, for example, I mean, Tesla had a time when they accepted Bitcoin for buying Tesla. And also, I think with El Salvador, the next thing that might come is that some people will agree with their employer that they get paid in Bitcoin or in cryptocurrencies. I think it's a likely event of the next 3 or 4 years. But what does it mean for taxation then? when those people want to buy, for example, a Tesla or a coffee, when they get initially paid in Bitcoin, what are the taxable events here?
If we look at the tax treatment in Austria as it is now, and if I as an employee get paid in Bitcoins, for example, it would be treated just as the salaries. For tax reasons, it would be treated as the salary as I get now, because the Austrian tax authorities have not assessed the topic yet. However, the German tax authorities have assessed this very topic. They said, yeah, what is the case if an employee of the startup, for example, gets a utility token or any other token as part of the monthly salary, and they say it, and you can compare the Austrian and the German tax view to a certain point, given that until 1945 it was the same. So they say it is just treated like the salary for income tax reasons. So there's the salaries tax, which is deducted by the employer, and at the end of the year you do the annual tax return. Yeah.
This can be very interesting because, for example, I mean, today Bitcoin has a price, I think, of $60,000 or something. So when you get, let's say, you get your annual salary today, and it's 60,000, it's 1 Bitcoin, and when the taxes are due next year, Bitcoin might have a price of $20,000. So there is a very high currency risk in that. Yeah. Do I understand that right when it comes to taxation?
Well, but you have to see the taxable event for private individual in Austria always occurs when the income inflow occurs, and if for example, your salary of January 2021 was let's say 1 Bitcoin, and it was, I think this was when it was 50,000 euros or something like that. The 50,000 are taxable basis. It doesn't matter what the price is at the end of the year.
When I think about the freelancers, it can be very interesting. So, for example, when a freelancer gets paid today and taxes are due next year, and the Bitcoin lost 2/3 of the value, but the tax is based on the time when the invoice was settled. Might be very interesting.
So sorry to interrupt, because for me, I have to bring my daughter to the dancing lesson. But I think you can go on to maybe talk into more detail about the tax reform and other very interesting topics. But at the end, I would like to give a shout out to the investors and traders of crypto assets, especially with the taxation in the past. When you get maybe a letter from the tax office and you think, yeah, you had not declared the taxes in a sufficient way, yeah. Or a compliant way, there are always ways to get the things right. For instance, you can make it self-disclosure, but you have to tackle it in a right way, and we would be happy to assist you with that. Also to advise you on how to treat your trading compliant in the tax way. And also we could inform you about what to do in the next year, maybe in order to minimize the tax burden because of the new tax reform in place in the next few months. Yeah.
Sounds great. Thank you very much, Oliver, for joining, and have fun with your daughter at the dancing classes.
Yeah. Thank you very much. Thank you for having me. Thank you very much, Michael. Yeah. And all the best to you guys out there. Yeah. Bye.
All the best to you too. Bye, Michael, let's go over a few use cases, I would say, and make the audience of the podcast a little bit more sensitive towards the necessity of also having taxation in mind. When we go back to this Bitcoin example, for example, when someone gets paid in Bitcoin and then starts using Bitcoin for daily purchases. For example, Bitpanda has an instrument invented together with Visa where you can basically use a Visa card, and in the background, they settle the transaction from a Bitcoin account. Did I understand you right from your explanation that every single transaction is basically then a taxable event?
Yeah, because it's considered an intangible asset. Then this, in Austria we call it barter transaction. So if you exchange one asset to another asset, then the market value of the given asset is what determines the tax base, and each of these transactions, yes, would be a taxable event. That's why with the tax treatment we have with this 1 year holding period, it's crucial that you do some documentation about when did you purchase the asset, and when did you sell the asset, or when was the payment or exchange. I mean, if you do it with a Visa service with Bitpanda, I'm sure they have, or you might think they have a software that does the documentation, but this is crucial for the 1 year holding period. Yes.
So it means after 1 year, currently with the current regulation, after 1 year holding Bitcoin, it can be used as like a currency, so it's not a taxable event then. But everything below, for example, Bitcoins that were purchased at the price of, I think it was 9,000 in December 2020, and are now used for buying a car, it's definitely a taxable event.
It's a taxable event, yes.
That's very interesting. There is one question that is that I can't answer with my rudimentary tax knowledge from the 90s. The wallets or the crypto exchanges. I mean, for example, Coinbase is based in the United States, and they have different tax laws. And Austrians can easily create a wallet and an account at Coinbase and purchase Bitcoin. And I think Coinbase probably has also the server located somewhere in the United States. Can it be that the simple transactions, buying and selling of Bitcoin, can create taxable events in other countries?
Yeah, that is possible. Because I mean that's hard to tell in general, but because that always depends on the tax law of the foreign jurisdiction. But it can be a taxable event in a foreign country because it depends on the tax treaty. You know, if you're a resident in Austria, you're subject to worldwide taxation. So every taxable income anywhere in the world is subject to Austrian income tax. And this event can also be subject to a taxable event in Austria. And in order to avoid these double taxation, there are tax treaties. And the tax treaties differ from country to country. And it depends then on the tax treaty that applies if there is a taxable event in a foreign country. But yes, generally speaking, it can be possible.
That's very interesting. So when I look back to the 90s, these double tax treaties mostly were for very high net worth individuals or for businesses. And the transactions, I think when a business from Austria did transactions with a US company, it was millions or billions. So it was no small transactions. And private people made from day-to-day transactions when they traveled. And now with the networked economy, for the mere fact of where the servers are located, also 10 euro purchases of Bitcoin can have to be viewed under double tax treaties. Is that the right understanding?
Yeah. However, you have to say that most of the tax treaties, the basics of the tax treaties, were created in the early 1920s. So these tax treaties were created when we did not have any clue about digitalization, when we didn't have any clue about the internet. I think that there might be an adaptation of these tax treaties necessary in order to cope with that new technology.
Yeah, but this is a huge work package for all governments globally, I would say.
Of course, it's huge. But I think this has not so much to do with crypto, but we can see that the European Union, the OECD, if you look at this OECD initiative for the minimum a tax rate of 15%, the global minimum tax rate. So I think if we look at that, we can see that organizations and states all around the world go on and work to reduce this work package.
Yeah, harmonization would make sense. So when you pay on certain transactions taxes somewhere in the world, it's a certain tax rate, and these reliefs from all other taxes, it makes sense. Otherwise, it would be very complex, because I think private people cannot afford proper tax consultancy for small transactions, but currently run into the risk that they might have legal consequences when they travel somewhere to another country, because without knowing, they created the taxable event. And it's an interesting perspective. Let's look at other possibilities to purchase cryptocurrencies. I think ETFs is something that is very popular currently in Europe, which, in my opinion, makes the process of buying and holding crypto assets or digital assets simpler and easier. What about ETFs? Is this also within this 12 months holding period, or are there other tax laws applicable?
In fact, there are other tax laws applicable, because basically it would be an investment fund, and investment funds for individuals is subject to capital gains taxation. So and with no holding period, and with the special tax rate of 27.5%. So this is where we really go from the intangible asset to a financial instrument. Yeah.
Okay, so it's basically just a standard tax rate that for all financial instruments are applicable. Yeah. The next case that I find very interesting is that companies like Tesla or MicroStrategy starting building partially their business strategy around Bitcoin. Does that change anything for people who own equity in the company? Do they have to think about additional tax consequences, or is it just treated with the capital gains tax?
It is just treated with the capital gains tax, because basically, if you possess, if you own a share of Tesla, for example, then Tesla can own many assets. They can own assets whatever they want, but the share you own is considered a financial instrument, and therefore capital gains tax applies. So if they use Bitcoin for a strategy, is not important for the immediate shareholder. It would be important for the person who wants to invest in Bitcoin, because what we have seen when Elon Musk suddenly said, no, we will not accept Bitcoin anymore, I think it dropped 10%. So it's real crazy sometimes.
Yeah, the greatest asset of Tesla is Elon Musk. So he has great influence on markets. I think also Dogecoin.
Dogecoin is, I think now I see so many people investing in Dogecoin, and I think the value gains are up to 200%. So I think, because at the beginning it was designed as a fun coin. I mean, this was basically a joke at the beginning, and now people really start honestly investing in Dogecoin. Yeah.
Yeah, I don't see a use case other than trading for fun.
Yeah, it's trading for fun.
Compared to, I think Michael Saylor pushes Bitcoin towards it's a store of value, which makes sense. Yeah. And as far as I understand your explanations and Oliver's explanations, is when private people purchase Bitcoin with the intention to hold it and bet on the tremendous increase in value up to 15 million per Bitcoin. After 1 year, they are basically tax-free, but they can also not use the losses. So
exactly,
instead of, which is a great thing. When I look at companies in Austria, what is when Austrian companies decide to purchase Bitcoin, for example, for transactions? What are the tax consequences for companies? Are they similar to private people, or are there other tax laws applicable?
It depends. It depends on the legal form, but if it is a corporation, then corporate income tax would apply, and corporate income tax for any tax for any income type is some standard 25% flat tax, and there is no holding period. So if you as a corporation buy and sell it, it is merely the same as with the capital income taxation. There is no holding period, and there is a standard tax rate of 25%. Yeah, and if you are a partnership, no corporation, but a partnership, there is also no holding period, because it's also considered business income. But you still have the progressive tax rate up to 55%, because if there's a partnership, not the partnership is the tax subject, but the partners behind this partnership are the tax subject. So individual persons are tax subject, and they are taxed on their individual basis. I mean, we always say that the progressive tax rate is up to 55%, but please consider that this is a really rare case, because only income exceeding 1 million euros is taxed at 55%. I think in Austria, these are 480 people, for example. So the 50% tax rate for income above 90,000 euros is the one that will more likely apply, the highest tax rate.
I completely agree to what you say until 2011. Where the usual way to making a million was make a salary or create a company, and also creating companies until they appreciate in value that much that the CEO or founder of a company can sell off shares of his company without negative consequences. Yeah. It's most likely 10 or 20 years. When I look at Bitcoin, with the gains of Bitcoin, I would assume that there's one or the other hidden millionaires.
That's true. That's true. Yeah.
Among us, because I think, I mean, it was, I think, in a Big Bang Theory episode of 2013 or 14 or 15, where they elaborated on the lost keys of a Bitcoin wallet. So it might very well be that some coins, but as long as it's private people, they are pretty safe under the current tax laws. When the wallet is held by a corporation and at some point in time they sell it, they basically must use the regular corporate tax rate, and that's it. But you mentioned very often in this podcast before, Oliver, that the tax laws are subject to change in the future. So it will not stay the same. What are the biggest changes that you see coming in the next 5 years?
I think one of the biggest changes will take place in the eco-social tax reform, which the Austrian government will introduce. I think it is possible that it will be introduced already by January the 1st next year, that there is a harmonization with the capital income, because we always have to look, okay, what are people doing with an asset, and they're not using crypto assets or cryptocurrency as means of payment. They're using it as means of alternative investment. Yeah. So I think this will also be the case in any other countries. For example, also Germany says that if specific characteristics of the assets are fulfilled, it can be a financial instrument. So I think that we will go towards a taxation like financial instruments, which in most of the jurisdictions, not only in Austria, but which in most of the jurisdictions implies a special tax rate. So that means no more progressive tax rate, no more holding period. For example, in Germany, you also have this 1-year holding period, which can be exceeded to 10 years if certain criteria are met, and no more progressive tax rate, but flat tax and no holding period.
Yeah, I understand the topic not well enough. For example, with the smart contracts, there are also token involved, I guess.
Yeah.
But what if people purchase or companies purchase these tokens then for executing the smart contracts? Are they treated differently then?
It depends on the token. Actually, the problem is we haven't seen the details about the tax reform. And for example, the Austrian tax authorities only refer to the term cryptocurrencies in the tax reform. And please keep in mind, we've already established that there's a huge difference between cryptocurrencies and crypto assets. And in my view, what we have to have a differentiated view, because I think the tax treatment now is not correct for all the speculative income. The holding period is not correct for all crypto assets, and a capital taxation for all crypto assets would also not be correct in my view, because there's so many different designs, there are so many different rights and values, which in my humble opinion require a different tax treatment.
Yeah, I agree with that. I mean, before 2017, mostly in the mass media, it was Bitcoin. With the definition, and since 2017, the universe expanded tremendously. I think currently it's about 10,000 different tokens.
Yeah, it's huge.
Where many work on smart contracts, or are not so much for speculation or store of values, but also I read about some projects who try to remodel the financial system structurally. This whole DeFi movement, and it's getting more and more complicated. So I think keeping that into tax regulations, it will be very interesting. I mean, the crypto asset space seems to be very fast moving.
Yeah.
And governments are usually, when it comes to taxation and laws, slower moving.
I think that's maybe one of the problems that I think you can put it like that the crypto scene is moving a little bit too fast for the legislator to cope with.
I think the political systems are rooted 100, 200 years ago. In how they operate structural, and the crypto space makes use of today's technology on a global scale, which is really interesting to see how quick this thing can move.
Well, I mean, I think we have already discussed this topic about the technological impact on the tax treatment, not only with crypto assets, but also with Google, Amazon, Spotify, you name it, because all these tax provisions emerged from the early 20th century, where a permanent establishment, for example, is something physical you can touch. And in today's global world, a PE is not necessarily something that you can touch. It can be something that is stored in the cloud or something like that. So, and we experience the same difficulties with crypto assets.
The use case that I like the most, and which is also very practicable today, is transaction of larger amounts globally. So I mean, historically, transferring billions from Europe to the United States was a slow process involving a lot of institutions, making sure that the transaction is correct, is right, nothing gets lost, or that the billions don't end up somewhere on the wrong bank account. And with Bitcoin, and the fees were very high. So, and they're still very high, in my opinion, compared to Bitcoin. I mean, when I look at Bitcoin, the transaction can be executed within the blink of an eye. Yes, I know it might take some time on the blockchain to close the transaction, but the fees compared to the traditional system are extremely low for such large-scale transactions. And this is, in my opinion, is the first outlook of how game-changing this technology will be in future.
It's definitely a game changer. Yes.
The one final question I would like to ask you, I mean, in my opinion, this whole crypto world and taxation is a moving target. And it's very tricky to keep up. What is your recommendation if someone wants to get more and especially tailor-made advice? I mean, as we saw in the discussion, there are so many use cases, so many different situations that I think there is no one-fit-all solution. So when someone wants to have advice, where can he go?
basically what I think you have to decide between what you want, because asset planning or estate planning is something we in the tax department actually do not do. We only advise on the tax structure, the possible tax solutions. So I think you would need a tax advisor, and you would need a strategic advisor or an asset advisor or something like that. So, and I think if you combine these two components, then you can really develop a good portfolio. Yes. But of course, as you already mentioned it, I think it is hard to a certain aspect, to a certain point, it is hard to predict what the future will bring, and what the value of all these tokens and coins will be in the future, because we always have to keep in mind that what we are facing is a high yield, high risk asset. You can gain millions, but you can lose millions. And I think that's what we also have to keep in mind when dealing with cryptos.
I absolutely agree to that, what you say. Nice final words. Always keep in your mind that price predictions are predictions. And as far as I know, nobody, even Ray Dalio says he cannot predict the market. Yeah. Or Warren Buffett also says they cannot predict the market. So cryptocurrencies can be very valuable in future. They can have the same value, or they can have no value at all. So we will see what the future brings. And if anybody from the audience wants to have tax advice, I think they can reach out to you and Oliver.
Of course, we will be happy to assist.
You can also hook them up with other experts in the field for asset management advice or technical advice.
Of course. We have a network in the sector, yes.
Michael, thank you very much for your time and for this interesting conversation. Let's plan for another episode where we look more on the technical aspects of the cryptocurrency world.
I would be delighted. Thank you, Christian, for hosting me and Oliver today. It was a real pleasure. And also to the audience, thank you for listening to us, and all the best to you.
Have a great day. Bye.
Bye, Christian. Thank you. Bye-bye.
Thanks for listening. Please share the podcast and make sure you've subscribed. Have a great day.